The Nigerian National Petroleum Corporation, NNPC, has renewed Oil Mining Lease 118 with oil and gas subsidiaries Shell, Total, Exxon Mobil, ENI for another 20 years. The West African country state oil firm made the statement on Tuesday. The deal signals the end of long-standing disputes over the interpretation of the fiscal terms of the production sharing contracts between the oil and gas firms and the state oil company to the tune of billions of dollars in revenue to the federal government of Nigeria. Joining us to discuss further from our Abuja studios, Sowumi Olabode, CEO of Cabtree and Vice Chair Gas to Power Study Group of the Nigerian Gas Association and Senior Legislative Aide of Gas and Power to the Nigeria Senate President. Also here in Lagos, Energy Analyst Dipo Oladehinde. Gentlemen, thank you so much for joining us. I guess, Sowumi, I'll start with you. Can we, as far as have a quick overview of a production sharing contract, just for our viewers, in case anyone needs help with that?
Okay, good morning, and thanks for inviting me. Thanks for having me. The production sharing contract is, as the name implies, a contract in which an international oil company, an IOC, engages with the local parent organization, in this case, the Nigerian government, to establish the basis and parameters for drilling oil. There are two fundamental ways with which IOCs drill oil. The first is a joint venture, and the second is a production sharing contract. Typically, in the joint venture, there's a bigger partner and a lesser partner, and both provide funds for the venture. But in the production sharing contract, the asset owner, in this case the national country, typically may be short of funds. And when they're short of funds, they do the production sharing contract options. What that implies is that the IOC will be responsible for all the risk, the financial risk taking. They're going to invest their money, they're going to drill the well, and after the well is drilled, they are now going to recover their cost of operations from the oil. And then the remainder of the oil that is produced after there's been cost recovery is done in terms of sharing what is produced, hence the name production sharing. So if they produce 100 barrels, for just example, a certain amount goes to the IOC that has done that, and a certain amount goes to the country. So basically, this being the way what it is, it's not new. It's been operating since the early 50s and all that, and is basically visible over the world.
Thank you so much for that, Sowumi. Dipo, let me come to you. This agreement, apparently about 12 or so years in the making. What took so long, Dipo?
Well, so basically it's about negotiation. This is one of Nigeria's most prolific oil fields, and when you're negotiating for fields like this, you need to be very careful. You need to cross your T's. You need to make sure everything is well sorted out. So one of the things that takes long, that probably is the reason for the delays, because of negotiations concerning the fiscal terms, negotiation concerning revenue, negotiation concerning the structural framework, negotiations concerning the gas commercialization plans as well. Majority of all these things always take time, but then once both parties are willing to come back to the drawing board, and once both parties are willing to sit down and adjust, negotiate, I think they will move forward. So that's basically where they are now, and I'm sure Nigerian government is also trying to look for more ways to make more money now. The global economy is probably trying to recover from the COVID-19 pandemic. And so the oil price is gradually going up. The oil price is gradually going back to areas it were before the COVID-19 came on board. So basically the government is trying to look for assets that are idle, assets that are not producing, and they're trying to make the best of what they have in order to get money to fund their fiscal operations.
Thank you for that, Dipo. Sowumi, let me come back to you. What's the significance of the agreement here?
Well, basically it shows that foreign investment can come into Nigeria. I mean, it's in the simplest form. But more importantly, it also speaks to the fact that contrary to a lot of the news reports that have been going on, both in terms of our economic fundamentals and all that, when people really need to invest in Nigeria, they will invest. So that speaks to it. I think those are significant achievements in that aspect. In terms of the other things that has been evidenced by Shell, when they talked about their withdrawal from the onshore assets. There's been a lot of commentary by people who know very little about what happens in the industry and how things operate, signifying the end of oil and all that. There are many reasons why oil will not disappear in the next couple of decades, but that's a discussion for another time. But the key thing here is that Shell left assets that are not that prolific onshore and went for significant assets that are more prolific offshore. So it's not a case of lack of confidence in the economy or the society, but it's a case of just pure business decisions to make the best interest of what is, or to make best decisions in terms of what is of more interest to them.
So we're putting that the statement said that this, the federal government is looking to earn about $780 million with respect to revenue. Are license renewal fees baked into that amount, to your knowledge?
I need until we see the details of the contract. We wouldn't know how the contract was signed and all that. But basically, there will be license fees, obviously. There will be, there will have been decisions and transactions that will happen that may not be public knowledge, that will be in the fine print. Definitely, there will be some income for the government. Whether it is now 780 million or even more, it's a different case entirely. But there will be some income for the government.
Thank you. So when I actually directed that question at Dipo. Dipo, do you agree? So go ahead, Dipo.
So
no problem. It's okay.
Basically,
So,
the license.
Go ahead.
Yeah, so it's included in it. From what the NNPC said yesterday, so you are going to be making a whole lot of money from the value chain. So the $780 million is not a fixed amount of money. It's a value chain process. So you make money from license renewal fee, you make money from gas commercialization, you make money from diverse sectors in that whole value chain. So the government is in to make a lot of money, and hopefully we'll see how it pans out before the duration and the time frame of the contract.
Thank you, Dipo. Okay, so when coming back to you now, you've already mentioned Shell with respect to divestment. That's from their onshore assets. They were in the news last week or so for looking to divest their onshore assets in Nigeria in favor of deep water offshore exploration. With this deal now, who's left to invest onshore in Nigeria? Is it indigenous firms?
Of course, indigenous firms. Shell is a behemoth. Technically speaking, in terms of the economy of Shell, is bigger than some countries. So what will be of interest to them may not be of interest to a few people who get it. We have oil wells here that produces 10,000 barrels per day. In Canada, because Canada does have some amount of oil as well, that is a prolific oil well for them. But we need to understand that when you do the mathematics, it's about $50 per day, and you multiply that by 10,000, that's some significant amount of money. So if you, as a local player, could get your financing right, you get your structuring right, you get your things right, that will be of interest to you. And the energy that the local players will put into it and make it profitable for them is different from the energy and interest that could go for a place like Shell. So definitely, it's a great opportunity for local players. And the interest of local players is totally different in a lot of ways from the interest of the international company. So definitely is a welcome development, actually. They become assets that local players can take advantage of, not just in oil, but also in gas. Because in terms of the opportunities that exist for gas commercialization, and the areas with which the government has made strategies for the gas for the gas master plan. I'm talking about gas to power, I'm talking about gas-based industries and gas to industry. They create a lot of opportunities. So it's a welcome development any which way you look at it.
Thank you, Sowumi. Dipo, let me come back to you, Dipo Oladehinde. Where is the petroleum industry bill in all of this? And I think, Sowumi, I'll have you answer as well. But Dipo first, if the government can sign this deal, does this reduce pressure on getting the petroleum industry bill passed, Dipo?
No. So basically, the bill will bring clarity for projections. So signing, it's good now, it's perfect now. But then what about your projections? What will you be aiming to get in 10, 15, or 20 years' time. So what the PIB will do, it will bring clarity in what IOCs stand to gain from their investments. The PIB will put specific framework in place to make sure that everybody gets specific amounts of money. So you know how to plan, you know how to do your projections, you know how to do your financial modeling to make sure that every amount of money you put into investment, you're able to repeat back in return. But then the PIB alone cannot solve all of the problems. The PIB is just a starting point to in quotes, a promised land. So the PIB is like a transition. It will put clarity in the front of everybody. Even if you are pulling out, if you want to remove your divestment, the PIB would tell you a certain percentage of what you stand to earn. The PIB would explain in terms of tax laws, what you stand to do as well, what you stand to get, how much are you paying on a periodic basis. The PIB would also give you clarity in terms of how you can earn money in terms of gas in the gas commercialization plan as well. So the PIB will basically is about bringing clarity into the picture. But is the signing of the deal alone? No, it's not. Is the PIB alone to put things in place? Yes. And then the government can, with deals like this, other oil blocks that are stagnant, other oil blocks that the government have not been able to look into, the PIB would give the government more incentives, and even IOCs more incentives to bring in their investments, to making more money and putting more money into projects.
Fantastic. So when we come back to you, they actually have I want to get your take very quickly on the PIB. Can it still be passed this year, Sowumi?
Yes, the government is looking very actively in passing it this year. At the moment, there are a team of legislators who are meeting somewhere outside the country to look at certain parameters into it, and all seems to be in plan on the way for a quick passage this year.
Great stuff. We're running out of time. I want to quickly get your take on this tweet. It's from financial analyst Carlo Aja. Let's float this tweet here. It says, advice to young folks out there, it's time to stop learning petrochemical engineering. It's dying. Rather, study renewables. It's growing. Same as finance. Oil and gas finance is winding down. Go learn how to value a solar farm. Sowumi, let me start with you. What do you make of that tweet as far as focusing on renewables? Briefly, if you can.
First of all, people who are not experts should stop giving expert advice on subjects they don't know. The oil industry is not going to disappear. Renewables is largely exaggerated. First of all, when you talk about the internal combustion engine, and that is we're talking about caterpillars, trailers, cars, and all that, you can't use renewables to drive them. You're not going to use renewables to do those things. So even if you eliminate fuel for cars, you still need those fuels for heavy engines. Then the other part of it is that there are over 10,000 products that are dependent on oil, from your pharmaceuticals to your paint to your hair, the hair that women use, to rooftops, to so many things. Until you have a substitute for those products, you are still going to use oil. So oil is not just about fuel and petrol. There are so many things that are dependent on, your carpet, I can go on and on.
Gotcha.
Until you have a replacement for those products, you are still going to use oil. So people should just stop talking about what they don't know. A lot of the issues of renewables are political. It's about the G7 nations, who are not largely oil-producing nations, who are also using their own issues to balance the trade.
We have to leave it there. Sowumi Olabode, CEO of Cabtree, also Dipo Oladehinde, energy analyst. Thank you so much for taking us through this OML 118 multi-billion-dollar deal that's been signed by NNPC and its partners.